Okay, we are back, and today we are going to be doing the last combination strategy that only looks at two of these technical indicators. It is the final combination of the four that we have. From there, we're going to start doing some more exploratory analysis. I'm going to be showing you guys my support and resistance code to add this to any of our already defined combination strategies, and we can also work with the fair value gap alongside some of these combinations we've done. And we can also go ahead and combine 3 or maybe 4 at a time in future episodes. So just to do one more really quick one, we're going to add another file. We're going to name it Money Flow Index and Bollinger Bands, MFI bb.ipynb. This is going to be the last combination that we have not tested so far. Just like always, we're going to set it to the side. I'm going to get rid of all these. Gone. Save. Here. All right. Get rid of this too. Split. And on this side, we're going to pull up MACD MFI, just so we have all of that set up. Get 2 cells on the right side. Control V. Take our data acquisition function and the global variables. I'm going to make this SPY. Make this 1 day. Do the same thing here. And for everybody watching that is not new here or is new here, I guess it doesn't matter. I realized that I was posting all of my YouTube videos in okay for kids mode, which I thought meant like, okay, I'm not swearing so kids can watch it. They won't get anything out of it, but it's okay to watch. I was completely wrong. That means YouTube thought I was making this content specifically for children, which is ridiculous. Anyway, that turns off comments, so nobody was ever allowed to comment on my videos, and I was getting a little annoyed because I like when people comment on my videos. So if you're watching this and you have like some time, just say whatever's on your mind. I don't care what it is. Just write me a comment. I would love to see one of those. I posted about 13 episodes on YouTube so far without a single comment because I was restricting them without even knowing. So now we've copied in all of our money flow index information from our MACD MFI script, and we're going to go to the MACD Bollinger Bands script and copy in the Bollinger Bands information. So get Bollinger Bands and the Bollinger Bands strategy. Control C, Control V. And again, I'm just going to make this BB. And we also need to get rid of the MACD. MACD global variables. We're going to set the money flow index overbought and oversold back to default. And we're going to steal our Bollinger Bands global variables from this script here. So Bollinger Bands length and standard deviations is going to be 1. I'll put those here. Remove these here too. Control X. Don't need. Great. So now we should have no underlines, and we can just take a peek at the Bollinger, or we can take a peek at our main function that we build now. So let's save that, run it, copy the main function in from here, and just make adjustments to it. Add the MFI. Great. Add BB. Awesome. Add MFI strategy, add Bollinger Band strategy, and then just to take a look at the data frame so far, let's run the whole main function. Okay, so we have a -1 when the money flow index is above the overbought threshold, and we have a +1 when it's below the oversold. Bollinger Bands is the same thing, except it's defined by the standard deviation of our look-back window, which we have as 20. Yes, we have it as 20. So now we have this combination. So when these say the same thing, then we should take a trade. When they say the opposite, we should not. I think when I was doing a study for MACD Bollinger Bands, I flipped the Bollinger Bands signal. So when the close price is greater than the upper band, go long. That's wrong. We want this to go short. And we want it to go long when it's lower than the lower band. So this way it's going to align with the direction of the relative strength index or the money flow index or the MACD even more often. So let's change this here. So when we run it, we should see some more. Yep. Now we have these ones in line. So this will be a bearish signal when it's above the overbought, just like it is here. Both of them are showing overbought at the same time. Awesome. So just like with our other ones, we're going to add these two signals together, and it's going to show -2, -1, 0, 1, or +2. The -2s are going to be sell signals, and the +2s are going to be long signals. So just like with our MACD Bollinger Bands code, we have an add full strategy and test full strategy function. Super simple. We just paste that right in. Great. So we don't have any MACD here, so that's the only adjustment we need to make right now. So ticker cumulative, and then it's going to be let's add some information for our strategy here to involve some tickers. So BBLN, Bollinger Bands, and then devs, deviations, and then we're also including the money flow index. So we can do MFI or overbought, overbought, oversold, and we can include those here. Overbought / oversold money flow index, and that's going to be the title. So when we run this and we add full strategy to the data frame, tab data frame equals add full strategy to the data frame equals test strategy, the data frame, run the whole thing. MACD strategy is not defined because we are not using it here. Here it is. We need MFI strategy. Because we have that here. We named the column after the technical indicator that we loaded in. Okay, so now we can see what it looks like when we combine the, oh, this is a legend. I want this to be the title. Okay, so that's a little better. I can make the figure size a bit different here because it's a long one. So let's do fig size equals, let's just do 14 by 8. I think you have to put that in parentheses. Try that to make the bottom one. Yeah, much longer. So now we get a big plot. That's the first time we've seen a big one like this. But that's something you can do with matplotlib. Just make your Plot's a little bit bigger using fig size. It's actually super simple. Now you can see how to do it. We can do a lot here. We can modify the overbought versus oversold. We can change the amount of deviations necessary to give that overbought or oversold. So what if we made it super stringent, where you need to have 2 standard deviations to ever even place a trade? This will probably make us pretty flat looking. Yeah, like it's super uncommon for it to be 2 standard deviations out. And even still, like, you're not even going up every single time. Like, if you're going short when it's in that zone, like, there should be a really high win rate if we're going to make it really stringent like that. So let's keep this at 1. And let's, instead of 70-30, which is the default, do 60-40. So 60-40. That makes it easier to get an overbought or oversold threshold from the money flow index. And that doesn't look so bad. It kind of goes up over time. You're actually beating the market for this period here. So let's zoom way out. Instead of 1,000 days, let's do 10,000 days. We are still doing daily SPY data. We can do hourly later. Okay, not so great. You're much better off just buying and holding. We can take another look at just leveraging this by 3. So instead of 1, do 3. Instead of -1, do 3 again. So because we have upwards direction, you know what? Really volatile. So it's not super bad. But let's go back to single leveraging, just because that is a wiser way of testing strategies. You shouldn't be betting on taking triple leverage trades for a long period of time, always. Unless, of course, you have like 100% confidence in your strategy, which we can't have if this doesn't work across various tickers, various time frames. Like, this should be robust. It should not work sometimes based on some historical backwards tests. So let's take a look at one of the best tickers from this quarter, Duolingo. Again, if you watch these videos, you can sometimes get some sneak peeks into the strong or premier portfolio for free. Duolingo is one of our top performers. You can see we bought it actually around here, and it is up about 65% in the last 2.5 months, which is awesome. Not 2.5, just 2 months. And then, so yeah, you're better off just buying and holding Duolingo. Another good one from this quarter was ODD. ODD is another stock that's gone up about 60% since being added about 2 months ago. And again, when it took off, we happened to be in a short position following this specific strategy. So again, you're better off just finding a model that might be able to identify these sorts of opportunities than you would trying to trade them. Because trading using backwards data is almost never sustainable. Finding something that works, especially using backwards looking data like we are now, is really, really, really close to impossible, especially for retail traders. That's part of why I made this channel. A lot of people, when they're doing backtesting, they're doing this by hand. They would do this whole 10,000 hour backtest here manually. It would take them weeks. And you guys, we just copied and pasted a couple other snippets that we've built together. And it's about probably a 15-minute video by now that has just, we've done the whole backtest without any difficulty at all. We can see exactly how well it works. There's no ambiguity. There's no maybe. There's no psychology. This is just it. You can see it's not super effective. And people will tell you, like, wow, if you can stay disciplined and stick to a multi-indicator strategy and just calculate your entries and exits, like you'll just make money that way because you're doing more work than the average investor who just buys and holds. But the reality is that's not the case. It's extremely hard to build something that works sustainably, robustly across multiple tickers, multiple time frames, because that, bluntly speaking, is just not how this works. I'm going to keep making these videos. I want to see if we can get super advanced, super complex, and I want to show you guys how to take this sort of approach to trading as well. Like, this is you can't really argue that this is a much better way of backtesting. Anyone who cannot do this is almost, in my opinion, destined to lose. If you're trying to take on the stock market and outperforming it without being able to just type in a couple commands, run it all, and check to see how that impacts your long-term returns, you are toast. You're going to lose your money. That's why 95% of people lose. So if you're watching this, I'm very proud of you. Thank you for sitting through the boredom. This is exactly what you need to at least have a chance at winning. I'm not expecting to come across some holy grail in this series, and I hope that's not what you were waiting on either. But I'm definitely going to keep doing this because I am just interested in it. I think it's super fun, entertaining, and there's always a possibility that we do find something really cool together. So follow along, and if I do encounter something revolutionary, you are going to be there for the ride. Until next time, stay sharp.